Ashby Partners, the masters of Canberra property management.
Many banks are different. What is the general recommendation to have as a deposit for a property?
Yeah, absolutely. Good question. The minimum deposit we need is 5%. So 5% plus your stamp duty and costs, and you can buy a property. Get into anything you like. There's a bit of a sweet spot though when we get to that 20% deposit. All of a sudden your loan application is quicker, your rates are better, and we also avoid that lender's mortgage insurance. Now, that doesn't have to be in the form of a cash deposit. If you already own a property and you've built up some equity over time by the property going up in value and the loan going down, so equity is the difference between the value in a property and what you owe on that. So that's called equity, and we can access that equity to use as a deposit for another property. So if some of your clients or people you deal with have a property they've paid off, they've built up their equity, we can access that as a deposit. So just because you don't have the money in the bank doesn't mean you can't then go and get another property and avoid that mortgage insurance.
Matt, if I don't have equity in my home, are there other ways to kind of get that?
Yeah, definitely. There's a number of ways that we see people source their deposits. One might be through savings. Quite a big one we're seeing at the moment is what's called a family guarantee. So mum and dad might have paid off their property, it's just sitting there with the title. Now the bank will take a guarantee, instead of you coming up with 20%, they'll just say we'll assign 20% against mum's house. So no one has to come up with the cash, no mortgage insurance is paid, and people can enter the market. So that's called a family guarantee or a security guarantee. So security guarantee, equity, savings and gifts are the way that people enter the market at the moment. So what that means is you don't have to have a cent to your name and you can buy a house. The bank will lend you 100% plus your stamp duty plus your purchase costs. So really 105% will get lent to you, and the 20% plus your stamp duty will get secured against mum and dad's property. So you don't need a cent to your name. As long as you've got that guarantor, then you're good to go.